All right, everybody, let us dig into this. It is October 24th, and we're going to take a look at what's going on. Kind of the same structure we've been having with this big bull flag right here, kind of consolidating. Like I said, in previous videos, we've got this channel, but it's more like a little bit more of like a megaphone-esque type pattern. Kind of want to share a couple of different things. So really, number one, we are at the top of the channel. So this is kind of the official, like, let's see what happens. Are we going to go down? Are we going to break out and go back up? It probably is a little bit more likely, I would say, at this point that we are aiming to go a little bit back up. And here's kind of my 2 cents on why. And then we'll talk about a little bit bigger picture stuff, I think. So number one, let me just throw one of these in here. Let's just see what the heck it looks like. So if I really start like here, and I just want to play this ridiculous game 1 or 2 or 5 times, kind of gives us an idea maybe of where things are going. You could also potentially map that one. But really the main things I'm looking for is, obviously the expansion that has to stop at a certain point, right? It can't keep expanding and go from 70,000 to 46,000 to 67,000 to 30. Like it would just get a little out of control. Market participants, aka you and me, would be like, this is insane. The traders would love it. But market participants who are just kind of holding, they're sitting there experiencing all this volatility, not so much a fan. And so what are we looking at? We're really looking at kind of 2 key areas. Number one is really where this channel is going. And we officially have a breakout, or, not even officially, because again, this is not the tightest structure, right? That's why I have 2 kind of patterns on here, this megaphone type pattern, and then this channel. And I added the midline because I want to kind of talk a little bit about why I think this is probably really as low as it's going to get, barring a recession, just to put that on the table. In a recession, we could literally see anything happen. But to give you an example of what that might look like, let me just show you a little familiar situation over here. And it would be bigger like we were used to, right? This happens to be March of 2020. And I think that the market structure really wasn't as like bullish at that time. We had a little thing going for a while, sure, but we were already selling off. And 6,000 was the lowest. But as it got up there to 10,005, we had this COVID situation is sold off, right? That's like 60% sell off. I think, or was it 70? I guess it depends on really from when to when, right? So that's almost 60. But then what happens? Boom, it gets bought back up. I didn't get in quite this low. I was on a plane this day. I did buy a lot around the 6,000, 6,500, and I was able to snag a little bit in the 4,000. But at that point, I was like, what is going on? Because again, we didn't know what the heck was going on, and I was traveling. And so anyway, that potentially could be a thing if we end up with a recession. But the question is really, where is that 70% retracement? Hypothetically, let's just say it goes to 100 grand, right? Here-ish. Oh my gosh, I was covering it. Okay, 30% retrace or 70% retracement. Boom, that's 30 grand. Which actually, as crazy as it sounds, would really not be the most insane level to really go to. Look at all of this. Actually, I should do like more of a rectangle instead. Let's paint a little zone. So if we do something like this, what do we see? We see lots of support here. Support. You could call this support resistance depending on what you're talking about. Now it obviously went down. Now it's coming up. Now it's hitting that resistance until it breaks out. So this happens to be a pretty serious level, but obviously there's higher levels that are kind of similar, like right in here, right in this $45,000 range. But there's way more down here. So in theory, if we get to $100,000 and then there's a recession, hey, we could see a $30,000 Bitcoin, which is nuts. But that is the beauty of a recession, and why we should always have cash on hand is to be prepared. Now, barring that ridiculous example, which I still think is going to happen at some point, but maybe the recession's already happened. Let's talk about where it's going to go kind of if we stay roughly in this channel. I don't think we're coming back down here anymore. And if we are, as you can see, this is just getting elongated. So let's say it takes a couple of weeks to get down here. We could see like 46-ish. I mean, that's pretty degenerate is the word I want to use with these gamblers over here in the crypto space. But could it happen? Like, yeah, sure. Okay, we can call it that. I just don't think that's as likely. And the main reason I say that is because of what just happened. So what just happened is we literally had, obviously we held the, someone is at my house. That's weird. We held this midline, right? Which in a parallel structure, we're starting to see this is resistance, king is down, pushes up, comes back through. Here it is resistance again. You see how there's all these little opportunities that it kind of experienced. That's the higher probability is that. On top of that, you have a round number of 56,000. We have this big wick down here that we might fill at about 50% of that wick could get filled. It could get filled all the way. But again, where are we? We're right around 60,000, 59, 60,000, somewhere in there. So it could come down that low. However, this sell off right here, I was in a short position and I got out actually way early because I really didn't think it was going to come all the way down here. There's like a little bit of a trend line over here. If you look at it, again, what are trend lines but lines that we just find confluence in, right? So we had a little bit there. I was pretty convinced we were going to be getting out right around here and reevaluating. There was some slippage in the market. You could see that by how much high volume there is. But slippage is like when you say, I want to sell it at $66,000 and it doesn't fill till $65,800 because of the amount of people trying at that time and the exchanges and the market makers not being able to essentially keep up. And so it's just called slippage. But that accounts for like a little bit of this wick. The point is we've got this wick. We've just had this ginormous buying candle here, but where does it put us? Puts us back in this same spot where we've gone up and now we're consolidating. So the question is, are we going to stay kind of in this range right here for a little bit and break out, which according to the structure, micro and macro is the case. We do have a strong uptrend. You've got these lows are high. So these are higher lows, higher low could create another one. But this really kind of is an interesting rejection to me. This kind of says to me that it's probably not going to come back down here and fill this area. Could it? It totally could. Again, we could see a wick down to $59,000, $60,000. But this candle yesterday, all this buying pressure was really interesting, and it kind of squeezes all that price action up into the top area. So while from a large standpoint, I still see that we could have some recession type price action whenever that event does occur. But God, who knows when that would occur, and we can't just sit on the sidelines the entire time. But I do want to keep a little cash on the side in that event. So I really think we've been going real big, and it's starting to get kind of smaller, and we've started to move up, and we're getting a little smaller again, telling us that there is a little bit more momentum in that space. Now we do have a couple of different things. We've still got to go fill this open interest that's up here. We've already surpassed the highs. In fact, let me see if I can. No, it's not going to line up anyway. Okay. So we've already surpassed the highs, but really, if you remember, I don't think I have that marked on any of these charts. Is that it? No, that's a negative Ghost Rider. Where are my drawings? Why did everything disappear? That's interesting. Sorry about this, everybody. This is a fascinating trend line. Look at that. It's just continuing the trend. This was just simply a deviation, which would make sense. And here's where you see a lot of the support. Oh, this is interesting. Look at this. Okay, so if you remember, I had several zones in here about the boring zone and the takeoff zone, and that we really had to hold this. We obviously didn't hold this. We experienced the bear market, but look how accurate that red line is. And look what happens when this finally did. Can I do it in a straight line? Probably not. Okay. But once we do kind of get this, you can see how all this liquidity is just ready to run. And this is why I call it the takeoff zone, is because once we do get there, there's not much stopping it from just running. And obviously it took off and really went up from there. Um, we've already talked about these things, all-time highs. Yeah. And so we started to run up. We have this orange line really marking these strong resistance levels right here. I'm actually kind of surprised how close this is as well. Depending on the exchange, this wick actually might go a little bit lower. And then obviously 60,000 being very strong support and resistance, as well as we've literally seen repeated over here. Again, kind of correlation to what I was referring to a moment ago. So let me go back over here. I'm not sure why they're not syncing. I think I have different charts up, which is okay. Got slow internet today. All right. So kind of coming back to this again, really have this as a pretty interesting trend line. These yellow lines could be potentially places they come down to. Again, as it goes farther, obviously this changes. This doesn't seem very strong to me. Like I just drew it on here. I'm not loving it. I would say those aren't very strong. You might be able to argue that one. I'm still kind of out on that one. The stronger trend lines would be confluence here, right? Do we consolidate in this channel? And maybe we do, maybe, which would be absolutely terrible. I don't foresee us getting all the way over here in this tiny little channel. I really am looking at this from one or two. Well, it's up or down, obviously, but as of right now, all of this structure says, including this structure, the big one, and then within it, obviously we have a little microstructure where we've just found some strong support. Can we find support again? And if we do, then we're going to break up. And the question is, when we break up, do we have one giant candle and go through, or do we come up, we come back around, we test this as support, and we go up? Very possible. I would say that's more likely. But again, just to clarify what levels we have to hit, we have to break above these levels first. And we're actually at right about 69 right now. And so this is really what I want to see. I'm not too excited really about any of this stuff until we start to get up, either up in this open interest range, which I think will get rejected actually the very first time. So we'll go up, we'll sell off, maybe even back down to our one of these lines here on this channel or this megaphone looking thing, which could be as simple as 71, could be 69. It's probably most likely going to be 69, from 74 to 69 here. And then we see that reversal, and now we start going up. Historically, when you look at the months themselves and which months did well in bull runs, if we scroll in here again, let's see here on this 2021 run, it would have been 2020, the year before the bull run, and that would have been October is right in here. So here's October, what they call Uptober. And then here is November, and November was our official breakout month from our consolidation area right here, which is kind of interesting. This got rejected right here at the highs, at the closes here. And then obviously this month just boom, pumped. And then it was off to the races for a year, basically. Interestingly, you come back to 2017 when the last run was, and what do we see? Let's go find 2017 was your big bull run. So we're looking at 2016. Man, it's amazing how much you got to zoom. It's just so cool. October's right here. These are monthly candles. I apologize if I didn't say that. You can tell by looking right up here where it says 1M. This is monthly, weekly, daily, 4 hours, that kind of thing. Each one of these candles represents whatever this is clicked on. Okay, so we look at where to go, September, October. All right, so right here, we'd already had a peak right here. And so this is clearly the thing to break this level, but we look at the open and the closes first, which is kind of interesting right here, would be my main level to look at. And that was in October when it broke, and then November broke up, and then December obviously broke out. My point being that fourth quarter, kind of interesting, because the next year becomes quite interesting, and I'm very excited for whenever that day comes, obviously, because when we used to look at this chart, if you've been with me the entire time on my little journey here, I got in on this one, right? Much like most people got in 2021, when it was pretty extended, right? Totally normal, but this was my education period. And we were able to really do some good things down here in the $4,000 range. But the point is that this is how I used to look at the charts. And what's amazing, absolutely amazing to me, is without changing, you can't see it actually. I mean, just look at this, right? And this is not logarithmic, which is normally how I would portray this. I can't do it on this one because I have so much markings on my other one. But the point is, it's absolutely crazy to see this amount of price action. This one candle from this one day, or this one especially, holy cow, just completely surpasses years of price action. The amount of volume and movement to go from 40 grand to 65 grand, $25,000 eclipses this entire thing. And then it really starts to eat into this. So it's just exciting to see. The next thing I want to talk about just briefly, now that we kind of, again, just recap here, now that we know the levels, I'm still very bullish. I just am cautiously optimistic right now. You have an election going on. You've got a handful of different things that, with economic policy, that I think are variables. I don't think the presidential election really has anything to do with this. Most people who think that it does aren't considering how many players are involved here, and the fact that Bitcoin specifically is a global asset class. It's just really not going to be near as manipulated as one might think. But with that being said, we do have a bullish pattern. We do have some levels we're looking at, and just nothing has really happened that's exciting from February, which is crazy because I've had some pretty good trades in here, just trading this little zone or whatever. But I'm excited to see kind of what happens. We'll take it day by day on that. All right, so let me come over here to dominance, negative. One more up. I'm gonna go back to the daily. Actually, I'm gonna go to weekly because there's gonna be a lot of candles. All right, here's what I'd like you to consider. So really, here's where so this is the market cap for Bitcoin, meaning that of all the money that is in the crypto space, all the money that's in the crypto space is what percentage of that is in Bitcoin versus other things. And that's called the Bitcoin dominance. So as you can see right here, and this marker on the right, it says 59%, 59.06%. Is where we've climbed to, meaning that the majority of the money is in Bitcoin, not in altcoins. Now, as this goes up, it means it's Bitcoin season, meaning you should have Bitcoin, you should be holding Bitcoin because Bitcoin's going up and money is flocking to Bitcoin. Whereas when money is leaving Bitcoin, it's only going one of two places. It's going into other asset classes, especially crypto. You're going to go to altcoins, or it's going to fiat currency, right? Or stable coins, something that's pretty much cash. But kind of interesting, really interesting time frame too. Down here at 57,000, you have some interesting support, right? And again, this is what's absolutely nuts to me about technical analysis is there's no logical reasoning for like, oh, well, why does it line up with this? It's just confluence, but it proves time and time and time again that people are the exact same that we always have been, and we are predictable. Because this is not the Bitcoin price. This is what percentage of money is going into Bitcoin, and it still has support and resistance levels. That's interesting. Back over here, the fact that it got up this high actually really was surprising to me. I don't think during the 2020-2021 timeframe, I would have ever predicted we would go back up this high into the 70s. I was really surprised. And it was just because of the number of altcoins at that time being pumped out. We saw a lot of that in 2017 as well. But in general, if this is going up, it's Bitcoin season, you want to be in Bitcoin. When this starts going down, it's what we call altcoin season, right? Or you want to be in cash. Because the money is fleeing Bitcoin, which often relates to, obviously, like the price of Bitcoin, but it's not directly correlated because, again, this isn't about the price. This is about where the money is flowing. And so we could see up to a spike where we're getting into some of this resistance level at the very, very top. But one of the things I want to show you about, if it goes up, it's Bitcoin season. If it goes down, it's altcoin season. I happen to know that in December of 2017, when the bull run happened, if we go and look at another chart, you'll see that right around the middle of December 2017, right here, December 17th, this week right here is obviously not only the peak of the Bitcoin price, but it happened to be the peak for, that time period, this time period right here. the where all the money was going. It went to here. Now, Bitcoin price started falling shortly after in the back part of December, and then obviously all of 2018. But what's fascinating is all that price action of the price going down to Bitcoin. You can also see how much money was just leaving Bitcoin. Everybody was selling their Bitcoin to go into something else. And this is really where we can say, okay, this is altcoin season. So in case you hold Ethereum or Solana or Link or whatever your coin is outside of Bitcoin, that's really what we're looking for. For example, right now, Bitcoin is up a pretty good chunk, right? Let me kind of just scroll back over here. Pretty good chunk during this time. This has been since September. It's been going up, up, up. But if you go and check on others, which is the altcoins themselves, right? Come look at this. This doesn't include Bitcoin or the top 10 coins. Actually, let's go to total 3 then. So this excludes Bitcoin and Ethereum. But instead of really having this strong run up, which actually this is kind of weak argument because it does have a run up, but it's market structure. Now that I think about it, this is not even a good example to show you. If I picked a coin, like for example, Link, right? It's not had a very big run. It's moved $1, right? In that time period. I should use percentages, but you get the point. You could pick any of these and most of them aren't really doing anything. In fact, Maker was one I just started to go look at. Here, let's click on this one. And while everything is going up, Maker has just been falling. And I think obviously see my levels here as it gets closer to $1,000. I think that's going to be kind of an interesting point. I started a position right around here. And so that's going long, but basically it's not going up at all, but I expect it to when the bull run happens. So I just think this is good positioning, at least for me right now. So really back to dominance. Last thing is just, again, seeing the correlations, seeing in 2021, January 2021, and then obviously all this money flying out of Bitcoin. Let's see if there's anything else we want to talk about. The S&P is starting to roll over a little bit. Nothing serious. We're still in this strong uptrend, right? Higher highs, higher lows. But man, it's crazy to me if you take out just those top 5-10 stocks, how this doesn't look so great. For example, if I go look at the Russell 2000, how are we doing? The Russell 2000, unlike the S&P 500, is 2,000 stocks. And you can see that even though we are on, dang it, I wish I could do this side by side. Kind of can, but I don't know how to switch back and forth. This is a strong uptrend, right? Very, very strong. You come back down to wherever IWM is, and I mean, our last high was in November of 2021. Ironically, this is all money printing right here. And then it's just kind of been poo-poo, womp, 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 kind of going throughout. So really there's not much happening in there, unfortunately. And what that means is that the average company, public company in the US is not near as strong as, for example, this skyrocketing asset that I trade all the time. Look at the size of this thing. This is literally insanity. And they had earnings today, and it's just been absolutely silliness. It went up 23% in a day. But you can't hold on to this stuff forever, right? Again, until it breaks above something like this yellow line and starts going up. To me, this is just overdone. So I just don't have a lot of faith in a lot of the stock market, so to speak, outside of these top 5, 7, 10 stocks that are just absolutely dominating Netflix, Google, Tesla, Nvidia, all that kind of stuff. So I think that's it. Let's see what the dollar's doing. Boring. Very sideways chop. The treasuries, well, no, we won't go into treasuries on this one. It's okay. The bottom line is we are still pretty up and to the right. It is just gangbusters, which is very, very exciting. Next video I do, I'll try to put up some of the different charts or the different indicators, like the rainbow indicator and stock to flow, and I'll kind of show you where we are. I think I did that in my last video as well. But as we're getting closer and closer, we're getting into that where we should be breaking out eventually. And once we break out, it'll be a good time. Again, $2 trillion. That's a freaking ton of money. I mean, that's crazy. And if it continues to go up, right, we could end up at 5 trillion, 10 trillion. And that's where things is just super interesting. I don't know, on one of my charts somewhere I marked the silver market cap, gold market cap's going to be, what was it, 10 or 12, something like that. So anyway, I hope that's helpful. Just a little bit of an insight into kind of where things are. I'm not too excited right now, as most of my videos have been over the past couple months. And you could even argue from probably right around here, there's just not much happening. To me, this is the same thing. And this is really good for day traders and swing traders, but not good for typically this audience, right? This is just, all right, hang in there, not much to see here. But right now, this is a good sign right here. We're getting a lot of weekly traction where it's getting bought up. If this week ends up here in the green, yeah, we're going to be up. So we'll see how it goes. Hope everybody's doing well. And feel free, if you got any questions, type them in the thing below. See ya.